Today, I want to explain how the squeeze is closer than ever. I want to talk about AMC's massive order imbalances that haven't been this large and this frequent since June of 2021. I want to explain what these order imbalances actually are and how they'll soon result in the AMC squeeze. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Data Murphy tweeted saying, find me another ticker that has an order imbalance every single day, buy side or sell side. He said, I can't find any others. You can see yet again another New York Stock Exchange order imbalance for AMC of 163,000 shares on the buy side. Now, I've touched on these order imbalances a few times over the last few weeks and previously over the last couple of years, but actually, how frequent are these order imbalances? Well, I scoured the internet and scoured Twitter and tried to record every single instance of an AMC order imbalance. If we go all the way back to 2021, we saw order imbalances in January and in February. We saw them again in June and July, and then again in September, October, and November. In 2022, again, we saw them in June, July, October, and November. Not as many as in 2021, but they still occurred. And now in 2023, we saw them again in July, and now we've seen a massive amount of order imbalances occurring in September. So far, 2023 is setting up to see more order imbalances than ever seen before, even more than in 2021, especially for September, October, and November. Over the last couple of weeks, we've seen order imbalances to the tune of hundreds of thousands of shares, 165,000 and previously 500,000 shares. Now, the largest number of shares on an order imbalance we saw was back in June of 2021, just before that June run-up, the day before seeing 1.2 million shares of order imbalances. So far, we're now seeing those order imbalances more frequently, but not quite as large as in June of 2021. Not yet, at least. What I find interesting is these order imbalances occur around January, June, and September, October, November. Obviously, there's reasons for this. January is for the January 2021 run-up. June is for the June 2021 run-up. But that leads me to believe the next run-up will occur in September, October, and November. I don't know if it's going to be 2023 or 2024, but this is my guess as to when the next run-up occurs. Especially if we see these order imbalances continue through October and through November, I think AMC will see a very, very big run, likely the short squeeze. I personally haven't yet seen the evidence, but Biggums believes these order imbalances have been happening pretty much every single day for the last 10 days consecutively. I could only see tweets for today, the 20th of September, the 15th, 13th, and 2nd, but maybe I'm wrong. But what I do know is we're seeing more order imbalances than ever before. And that tells me the squeeze is also closer than ever before as well. But let's talk about what an order imbalance actually is. Again, I've touched on it briefly before, but I've never dove too in depth on it. And I've never taken the actual definition from Investopedia. You can currently get a guaranteed free share of Tesla or of Google and up to 15 free shares on top of that, worth up to $2,000 each, which you could always use to buy more shares of AMC or of GameStop or of any other stock. All you have to do is sign up to Moomoo using the link in the description below and make the required qualifying temporary deposit. Signing up to Moomoo is free and it's easy, it just requires that temporary deposit, but it's a really great way to help support the channel. And on top of that, Moomoo is very easy to use. They've got tons of technical indicators and advanced charting tools and their own options trading platform. So Investopedia asks, what is an imbalance of orders? They say an imbalance of orders exists when there's too many orders of a listed security that cannot be fully matched by the opposite order on an exchange. Now it says exchange, but it also means in the dark pools, on OTC markets, or anywhere out there. There's not enough of one order to match the opposing order. It says an imbalance of orders is where a market exchange or dark pool or OTC market receives too many of one kind of order, buy, sell or limit, and not enough of the order's counterpoint or opposing order. For sellers to complete their trades, there must be buyers, and for buyers to complete their trades, there must also be sellers. When the equation is slanted too heavily in one direction, it creates an imbalance. And the imbalances we've been seeing this entire time is buy-side order imbalances. Basically, there's too many buy orders and not enough sell orders. We've seen buy-side imbalances all through 2021, 2022 and 2023. Very rarely, if not never, seeing a sell-side order imbalance, obviously. And it says if the imbalance happens during regular trading, the shares are monitored by a market specialist, aka likely a market maker, aka likely Virtu or Citadel. And extra shares may be distributed from a reserve that goes to the liquidity of the security, aka those infinite liquidity fairy shares. Now, so let's explain what this order imbalance actually looks like, how it's currently being resolved, but how it will soon be resolved. Right now, you've got an influx of buy orders and you've got tons of them. You've got buy order 1, 2, 3, 4, 5, and 6, all at the current trading price of $8 per share. And you have an imbalance of sell orders because there's only one sell order, which is obviously Mr. Paperhand. The remaining sell orders are nowhere near the current trader price. Let's say at $1,000, you've got sell order 1, 2, 3, and 4. Obviously, to stop the price rocketing up to that next sell order at $1,000 per share, Virtu steps in with their infinite liquidity fairy abilities to obviously fulfill that order imbalance. Virtu uses their special reserve of non-existent shares to fulfill all of these buy orders. But by doing so, Virtu is just creating more FTDs, and Virtu is digging their hole deeper in terms of security sold, not yet purchased. Every single order Virtu fulfills is being fulfilled with synthetic shares, which Virtu is still on the hook for, still holding that liability. And that's why we're seeing AMC's failed to delivers reaching nearly 70% of the entire of August's trading volume. It says a significantly high percentage of FTDs in August has raised significant questions about the current state of AMC's stocks affairs. Importantly, this isn't 70% of trading going through the dark pool, this is 70% of all trading being failed. It says in August, FTDs in AMC totaled more than 264 million shares, roughly 70% of the stock's monthly trading volume. And saying such a high percentage of FTDs could be, or likely is, related to market irregularities or illegal practices such as naked short selling. Obviously, it doesn't take a genius to figure out what's currently happening to AMC stock is criminal. It says August 2023 trading volume was 380 million shares, a surge of approximately 80 million shares compared to July, and an increase of over 600% compared to August 2022 last year. Last month, AMC traded way more shares than ever before, not since June of 2021, and January 2021 before that. But this time around, the majority of those trades actually failed, or more specifically resulted in FTDs. This is why I said recently, without these FTDs, the AMC squeeze would have been guaranteed last month. But as I've also explained, Virtu is currently being sued by the SEC, and its customers are currently performing a mass exodus from Virtu. It's even got to the point where Doug Sifu now even refuses to communicate with AMC Bigums, replying to tons of other tweets from other users, but not responding to Bigums. Clearly, Virtu is having an absolute nightmare and could potentially collapse over the coming months. And obviously, without Virtu being this infinite liquidity fairy fulfilling these trades, the AMC price will skyrocket to the next real sell order, and will continue skyrocketing to the next available sell order after that as more and more buys flood in. And it seems Doug Sifu is getting more and more desperate, now begging the SEC to halt Bed Bath & Beyond trading. InvestorTurf tweeted saying Doug Sifu, the CEO of Virtu Financial, called on the SEC to stop the trading in Bed Bath & Beyond, stating, Gary Gensler, if you care about investor protection, you'd halt trading in this worthless name. This is pathetic. I'm not surprised Doug Sifu is desperate for the trading in Bed Bath & Beyond to stop. because obviously Virtu is doing the exact same thing with Bed Bath & Beyond as they're currently doing with AMC. Virtu is filling these early sell orders in Bed Bath & Beyond, and therefore they also have a massive synthetic shorting liability for Bed Bath & Beyond as well. But obviously if the trading in Bed Bath & Beyond is formally stopped and is not allowed to ever reoccur like they've tried to do with MMTLP, that effectively lets Virtu off the hook. But speaking of MMTLP, members of Congress have now ordered a proper MMTLP share count. You may remember a few days ago, Gary Gensler was recently grilled by members of Congress about MMTLP. He basically said there may be an investigation into MMTLP, but he can't really comment. But Congress also said, well, if you can't comment and tell us the results, how do we know you're actually performing an investigation? And it seems Congress is now going further and is demanding a share count for MMTLP. And Suspended POS has tweeted about how it's game over for the shorts soon, speaking on the AMC bonds. He believes Adam Aaron's checkmate move is definitely tied to the bonds. You remember again, I spoke about this the other day on how AMC has just repaid one of their bonds, the final bond restricting AMC from paying dividends. But ChatGPT also has interesting things to say about those hedge funds that are shorting bonds. It says when a bond issuer recalls or calls back a bond, aka how AMC has just recalled and repaid this bond, it means they're redeeming it before its maturity date. And it says this can create some complications for short sellers who have borrowed and sold these bonds in the market with the expectation they'll be able to buy them back at a lower price before returning them to the holder. And it says here's what happens to short sellers during a bond recall, saying when a bond is called, bondholders are typically required to return their bonds to the issuer at the specified call price. This means short sellers must buy the bonds at the call price to cover their short positions. The recall announcement of AMC buying back those bonds can lead to an increased demand for those bonds, driving up the bond price, meaning that short sellers may need to purchase that bond back at a higher price than they originally sold them for, resulting in a loss. This is obviously similar to short sellers having to buy back those shares during a margin call, but is effectively not a stock or share margin call, it's effectively a bond margin call. This is really interesting that short sellers are not only going to be losing money on AMC shares, but also losing money on AMC's bonds as well. It seems that as time goes by, these shorts are in an even worse place. It seems the shorts have dug themselves deeper and deeper and deeper and are now stuck with no escape. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.